TradeMonster.com, 4.5 stars, best online broker, 2 years running according to Barron's. TradeMonster.com.
Bienvenidos from the floor of the CME Group here in Chicago, April 25th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms in their overnight cash management. Was off last week, had a great trip over to España. I've been to Mallorca. Beautiful, beautiful place. I highly recommend going over. Wonderful paella, wonderful sangria. Let's talk about these markets. You know, these markets, we still have the same issues at hand. I think this week we're seeing a really quiet day today. You know, the day after Easter Sunday, pretty quiet, closed over in Europe right now. So we're seeing these markets kind of tentative right here, a little bit off in the S&P, but I really think we continue to look towards the Fed, not to beat a dead horse, but we're looking towards the Fed for clarity. And this week, Ben Bernanke is going to have his first interview, and I think he's going to have his makeup on, he's ready to rock, and I don't think, there's false expectations here. I think people are thinking that Ben's going to come out and really disclose something in his interviews. There's not going to be any more clarity here, folks. We have till June 30th, till the QE2 will be seen all the way through fruition, and then we'll see. And I think that's representative of the markets. We saw in that S&P last week, really came and grabbed it. It was a great test down in that 50-day moving average, rocked above and tested that 1338 level. I've talked about that 1338 level for a month now, and we went up, I think it was last Tuesday or Wednesday. The Wi-Fi was a little spotty over there in Spain. The last Tuesday or Wednesday, went up there and tested and came back off, and right now we're kind of seeing that 35 level is a high today, 27 currently on the lows right now. So let's look at that 1319.75 level in the S&P. That's the weekly pivot. I think the bonds, it's a really telling. The week before last, we saw that bond market. That 10-year was nearly 360 on the yield. Right now, we're trading out about 338, and currently today, you're seeing a kind of a flight to quality again. So maybe is this the precursor? Is there the vision, the leadership we talk about in this market? That Treasury complex seems to be leading us. So right now, they've really come and grabbed this 5-year, this 10-year, and the long bond is now catching up on the outer side of the curve. So we'll see with the supply this week how this works out. But I think right now we're going to have a pretty sideways trade. But at 1338, that is the line in the sand, folks, in the S&P. We get above there, you cannot be short. They're going to hit so many stops, it could be just a really quick swipe all the way up to 1350, 52 I see on the chart. Underneath here, play this 1319 level. But I think right now the euro currency, we saw euro currency continue to go higher. It's just due to the policy situation. The US dollar, it's borderline in a free-for-all, and I think the Fed wanted that, but now I think enough is enough, folks, because we're seeing, I got crushed over there in that euro currency. That $2 cappuccino is actually a $4 cappuccino. So we're really seeing that euro currency and all these other markets be tied together, all looking towards Uncle Ben. So I think the numbers that came out today, not too pertinent actually in the market. But let's look and be careful. And one thing from the floor of the CME Group here in Chicago, remember, be the hammer, not the nail.
I can take it to the next level, baby. If you want this goodness, sicker than the remix.